So going into the second half, what we are looking for is basically a continuation of the stable recovery in the economy with, on the external side, the global recovery supporting China's export sector, as we already saw in the July export number. And then on the domestic side, hopefully we will have a continuation of the domestic demand recovery going into the second half. However, the picture on the domestic demand side so far has been less clear than the external recovery, in the sense that if you again look at the July trade report, the import side was actually somewhat softer than expected. And then if you look at some of the industry numbers, such as the machinery data, the steel output for July, they also came in on the softer side. So in that perspective, I think we should still very much closely follow the domestic demand indicator as for how sustainable is the recovery going ahead. And then from that perspective, we see the still some uncertainty on the real estate sector and also the continuing problem of overcapacity. Yeah, indeed, you have seen a series of pro-growth measures in the past 3 months or so. And I think what we are going to see in the second half is basically a continuation of that approach, basically a targeted approach to support selective sectors, such as infrastructure, affordable housing, the energy production protection sector, the new energy sector, and so on. So with those measures continuing to carry out in the second half, that would quite likely support some steady recovery in the economy. And on the macro policy side, the way we see is that you will have basically continuation of the macro policy stance in terms of both fiscal policy and monetary policy. What that means is that, for example, for monetary policy, you would quite unlikely to see either significant easing or significant tightening going into second half. So basically a continuation of the policy stance that we have seen in recent months. Indeed, we do see the property sector as one of the key risk area going into the second half of the year and probably going into early part of 2015. I think the authorities also recognize that risk for the property sector. And in recent months, what we have seen is that especially at the local government level, you have seen quite a number of local governments trying to selectively ease some of the tightening measures in place for the property sector in the past couple of years. And if you look at the number on the transaction side, there seem to be some stabilization in recent weeks along with these measures. But I think at the macro top-down picture, the property sector is still a key risk area going ahead. I think in terms of the reform, indeed, reforms are very important of paving the ground for more sustainable growth in the medium term. But you do have potentially for certain reforms some short-term impact, which might not necessarily be positive on the real economy. So from that perspective, the way we would see is that how they would select the priority and the time schedule of the reform. So given the short-term economic vulnerability of the growth profile in the near term, the way we see is that it's quite likely that they will be more focus on those reforms that have either a positive impact on growth or a neutral impact on growth. So from that, we could derive sectors such as financial sector reform, the further relaxation for the private sector to join the economy, and so on. That would be more pushed out with more short-term impact.